morning, I'm James Gruber. Welcome to the Morning Report for Monday the 3rd of March. It's been a busy 24 hours of market reaction since we last spoke, following the conflict and tensions in the Middle East, which started on the weekend with US-Israeli airstrikes against Iran and then Iran's response. Australian shares are poised to open lower, with index futures down 0.2%. Yesterday, the ASX 200 reached a new record high. Pretty amazing in the circumstances. The index finished marginally higher to 9,200.90. Heavyweight banks were pummeled, with the sector down 1.5%, with Macquarie the worst of the bunch, down 6.4%. Airlines too suffered, with Qantas lower by 5.4%. However, this was offset by big gains in energy and mining stocks. The likes of Karoon Energy soared 15% and Woodside was 7% higher. Commodities will be in everyone's sights because of the impact of the military action on key supply areas for oil. There's been a lot of focus on global oil prices, and that will continue as long as the conflict continues. On that topic, US President Donald Trump has made some public comments on timings while at an event at the White House on Monday, suggesting the operation was substantially ahead of time predictions, but also that they had predicted 4 to 5 weeks and that they have, quote, the capability to go far longer than that. Time will tell. Global oil surged on Monday as Iran's Revolutionary Guards commander said that the Strait of Hormuz was closed and Iran would set fire to any ship trying to pass. Around 20% of global oil supplies pass through the strait. Brent crude futures are trading 8% higher to $79.26 a barrel. What does that mean for drivers here in Australia? Well, when the oil price rises, it usually translates to higher petrol prices. As a rule of thumb, each $10 US a barrel rise in oil can add 10 cents a litre at the pump. So oil's $6 a barrel lift in prices overnight can raise petrol prices by 6 cents a litre. Higher oil prices aren't good for inflation either, and that ultimately has a bearing on interest rates. That's why the RBA will be monitoring the oil prices closely. Gold futures were up on Monday on safe haven buying before profit-taking set in. Futures were last trading up 2% to $5,353 an ounce. Copper futures were down from 1-month highs due to a stronger US dollar. The futures were 1.8% lower. Meanwhile, aluminium futures hit a 1-month high on Middle Eastern supply concerns, up 2.1%. Iron ore futures were 0.7% higher at $99.81 a tonne. Let's look at currencies. The Aussie dollar bucked the trend of most currencies and was last trading higher at 70.88 US cents. Let's go back a step to see how Wall Street and other world markets have finished. On Monday, the Dow Jones index was down 0.2%, the S&P 500 index was flat, and the Nasdaq index was 0.4% higher. There are some developments worth highlighting. Okay, let's take a closer look at the trading day there. Gains in technology stocks offset broader market losses, stemming from worries that a prolonged Middle Eastern conflict could disrupt global trade routes and reignite inflationary pressures. Stocks that were hit the most included airlines, as a number of carriers halted flights, while several oil and gas facilities in the Middle East stopped production, which pushed crude prices up. Delta and United Airlines tumbled 2.2% and 2.9% respectively, while crude price-sensitive cruise stocks such as Carnival lost 8% and Norwegian Cruise fell over 11%. Offsetting those losses, Nvidia gained 2.9% and Microsoft climbed 1.5%, recovering from sharp declines over the past month. The gains helped the S&P 500 and the Nasdaq cut losses after briefly hitting 2-week lows earlier in the session. Defence stocks also got a boost, with Lockheed Martin up 3.4% and Palantir up 5.8%. US government bond yields shot higher on Monday as a jump in oil prices raised worries about inflation. The US 10-year Treasury yield was 8 points higher to 4.04%, while the US 2-year Treasury yield was 10 points higher to 3.48%. To the European markets, they sank to a 2-week low on Monday as the Middle East conflict triggered a broad-based sell-off that left most of the sectors in the red. Bank shares took some of the heaviest punches. UK lenders were among the hardest hit given their exposure to the Middle East, with HSBC, Barclays, Standard Chartered down 4 to 5%. Airlines and travel stocks were hammered as well, hit by airspace closures and suspended routes to the Middle East, a key global aviation corridor. Lufthansa tumbled as much as 11%, while British Airways owner ICAG and Air France KLM lost 5% and 7% respectively. The continent-wide FTSE Euro First 300 index fell 1.6%, while the UK FTSE 100 was down 1.2%. What are we watching this week? Well, besides monitoring developments out of the Middle East, the Reserve Bank Governor has delivered the keynote speech at the AFR Business Summit today. She noted the risks to inflation from higher oil prices, as well as the risks to the world economy slowing potentially because of this conflict if it drags on. The CBA economics team is expecting the RBA to next increase the cash rate by 25 basis points at their meeting in May. Life 360 is due to release results today. Meanwhile, building approvals are out for January. As the team here says, this data set is notoriously volatile. CBA is forecasting a resumption of growth in January with a 5% increase. And there are GDP figures out tomorrow. That's it for today. For further developments on the local trading session, please tune into the CommSec Market Update podcast this afternoon, and of course, the Market Close video. Have a great day.